Hey, what's up, everyone? Welcome back to the channel. Today, we're tackling something wild, Tesla stock and its roller coaster ride in the market. Just today, Tesla took a hit, dropping due to Trump's tariffs. Definitely dropped like a rock, but here's the twist. Not all funds are down. The TSL strategy, which holds 80% Tesla exposure, actually finished the day up. And the secret is all about the options. So we'll break down Tesla's volatility, unpack a little bit about how TSL works, and about the options overlay, and just a little bit of a deep dive on how options can act like insurance, but not just for selling options. Most people talk about selling options, but not about buying options. So Tesla's volatility today. First of all, Tesla stock is very famous. It's known for being extremely volatile. If we look out for a long period in time, Tesla has gone up and down, and it's been pretty wild to say the least. But the thing is, there is not just downside for volatility. There's also opportunity amidst the chaos. So when Tesla's price moves fast, it's usually tied to news and market sentiment and different things because it's a very contentious stock, and people are either spooked or very bullish about things. So it tends to go up and down, up and down. It's very different from Coke, for example. So the difference is if someone holds some options, it's possible to offset some of that up and down, especially if the reason why it's going up and down is the market. So first of all, what is TSL? So TSL is a primarily Tesla focused ETF. It either holds 80%, 100%, or 150% exposure to Tesla. And at different times, there's a different amount of Tesla that it's exposed to. Right now, it's 80% with something called swaps. But the main thing is it also holds an options overlay. So what an options overlay can do is if there is something that is not, related to Tesla, for example, a broad market drop, it can actually provide a hedging element to that, so that if the whole market drops, it can offset. So what a put does is it actually goes up when the underlying security goes down. So that's why it is possible, if we look at the 5-day chart, it is possible for something that holds 80, 200, or 150% Tesla to generally follow Tesla, but suddenly when there's a very steep market drop, it is possible to diverge from Tesla itself. And that's because the options overlay can kick in, and the returns can be very asymmetric. So sometimes this is not widely known how options can behave, but basically you can think of it kind of like the way that VCs think about investments. So for a VC, they may put in a small bet across 100 times for 100 different startups. And out of the 100 different startups, most of the time they make zero. But the few times that it becomes huge, like Uber, or Airbnb, or whatever, that pays for all the different times that they made the small bets and lost everything. So it's a very different style of investing, but I do believe that it is possible to effectively use options and bring this kind of VC mindset to certain disruptive names, for example, like Tesla, or it can be used for offsetting other things like market risk. So, how does it actually work as insurance? Well, first of all, options are contracts that let you buy or sell a stock at a specific price. So that's called the strike price, and it's within a set time frame. So that's very different from stocks where there is no time frame, right? Basically, this options contract, you're saying that something's going to go up or down within a certain period of time. So for TSL, it's using put options. So a put option gains value when the stock price drops. So in this case, SPXW and these different things, basically it's based on S&P 500 and the general, market. When it's dropping, it will actually go up in value in general. So there's a lot of other videos on how options actually work. But the main takeaway here is that options cost money, but which means that over time, the value of the option may go down because if it doesn't actually hit the strike, if it doesn't go in the direction that you want, then it may even expire worthless. But in some cases, the options do pay off, and it could help with the performance. So, it's not just for ETFs. It can be for individual investors as well. It's just a way that you can hedge your other investments. It's definitely not everybody. Definitely not. None of this video is for investment advice, but it's just to kind of explain that there is something out there called options. So, as an example, if someone actually invested 10K into SPY, which S&P 500 puts, it would have become $3 million in the past couple days, which is kind of insane. It's a 26,000% return. You'd never see this kind of return with just S&P 500. But basically, it is an insane type of return. But it is good to bear in mind that statistically, most of the time, this 10K would have gone to zero. So what is the big backdrop here? Yes, Tesla's down. It is interesting to see that there are ways to hedge against market risk. But the big backdrop for Tesla is not just today's drop. It's about what makes Tesla such a disruptive company. And the thing that is on the horizon right now is Tesla released early access in the US to hardware for vehicles. And that is the crazy part about it. That here you can actually join in on the early access program. You agree to give a lot more information than before. And basically the takeaway is they are getting very close to rolling out FSD, which is full self-driving. So yeah, FSD is Tesla's golden ticket. Just recently, FSD has come out to early adopters, and it's a huge step toward fully autonomous vehicles. So imagine where Tesla's fleet is basically a network of self-driving cars, and how much that's going to change society. So that is kind of like the ultimate options play. Most of the market does not realize that a company is so close to self-driving cars. They've seen basically, the sky is falling so many times. And they've heard, self-driving cars are coming, but they don't believe it because it never happened. But that doesn't mean that it's not going to happen. So the advancement in FSD has been insane, and they are starting to do this early access program. So who knows? FSD could unlock billions in revenue long term. And it really shows that Tesla's not just a car company, but a tech giant in the making. So, today Tesla dropped over 10%. Ouch, it hurts. There are ways to hedge against it, as we've seen with other strategies. But that there's no guarantees that options will continue to hedge against things like this. And there's no way to fully be insulated from this. But from a long-term perspective, it's very interesting that Tesla is still a strong company. And what makes it strong is actually the tech part of things, not in the short term. So Tesla's FSD tech, it keeps us hyped in the long run. And whether you're uh, trading it, Tesla directly or trying out TSL, there's a lot of things to be optimistic about. We believe, and yeah, I'm curious. What do you think of Tesla's long term prospects? Feel free to like and comment below.